Hello everyone, we're back with another video, this time on how we're doing as of the end of May or the start of June with our £312,000 investment portfolio. Let's do it. Alright, so standard stuff then. The top right pictures are taken from my investment portfolios within Trading 212. The top row is general investment accounts for my wife and me, and then the bottom two are the ISAs for my wife and me. Both fully topped out for the year after we added 40 grand into the ISAs in April and then another 12 grand into the GIA accounts. Also in April to give us 52,000, which I expect honestly to be it for the rest of the year. So we have progressed month on month. We're up 8,000. Honestly, it's been all over the place though. Depending on when I look, it can be up quite substantially more, down a little bit. It doesn't take much, a tweet from Trump and suddenly it's going one way or another. So it's been pretty wild, honestly, for the last couple of months. Some big four-figure swings, and even a couple of five-figure swings now as well. So that's quite new for me to have sort of more than 10,000 swing in a single day. But we're still getting used to it and feeling actually broadly comfortable with it, not really doubting the process or anything like that. Our portfolio technically is at an all-time high or near enough anyway. It's been a little bit higher in the middle of May, but we're still quite far off of our all-time profit, all-time high. The reason for that really is the fact that we added that 52,000 in April, so hence the portfolio itself is at or near all-time highs. But some of our larger positions are still down sort of 10% or so from their respective all-time highs. So, these three positions account for about 50% of my portfolio. So then being down 10% still is really the main difference between it. It doesn't take much when you've got that kind of weighting for those to have that kind of impact. So, yep, that's really the reason for that. And then I mentioned this last month, but I've still been quite lazy in terms of how I update my Google document. So you can see here, like the figures are basically aggregated into just the Liam and Ever ISAs. But really here we have got that 6-7 grand. The reason for that is because basically each position is forced to go into one of the portfolios because I have sort of duplicate positions in my GIA as well as my ISA. It's all being grouped into the ISA, so I just need to sort of refine my way of aggregating up, and I haven't done that yet. I didn't know if these were going to stay, to be honest, or what the real plan was, but I'm hoping to basically keep them for the foreseeable future. So I think it's going to be worth spending, I don't even know, probably an hour, probably not even that. Just needs a sort of a modest tweak in the logic of my Google Sheets in order to do that. But I just don't want to frig anything up and then have to fix it again. So yeah, that's on my to-do list to do over June. So hopefully when we do this video, we'll have a more accurate breakdown. But honestly, it's modest in the scheme of things, and you can just add those figures to the the Google Docs. Well, sorry, subtract from the Google Docs to get the reconciliation. You can kind of eyeball it fairly easily, I think. So that's how we're doing anyway. Now, in terms of the breakdown, we're going to do that next. All right, so I mentioned top three are 50%, but you can quickly see here it's actually north of 60% there. Overall, my portfolio remains extremely top heavy, but honestly, I'm super happy with it. I made it even more top heavy over April. I've actually slightly broadened it over May, just trimming off a couple of the Alliance Technology Trust positions. I sold at like £4, so technically I sort of sold 2 or 3% above where it is now. But honestly, it was mainly for rebalancing. I was sort of like realizing my portfolio is now so heavily weighted into tech. I bought a lot of these things at like 3.30, so selling at £4 or 3.98, I think it was. Felt really good. It was just a very quick way of realizing a little bit of profit, and now we're sort of distributing back over into value positions. So primarily, they're my number four position in Frogmorton. I continue to acquire quite aggressively. I think a lot of the companies in there are substantially undervalued, and then I also get a discount on the value of the fund as well against its NAV. So it just seems like a really great um, fund to be buying into, basically from that perspective. I consider that, by the way, my UK quality position. You can look at something like Fidelity Special Values if you want a genuinely value centric UK ETF, but I only have Frogmorton now, and again, to me, that's quality. Um, Small caps primarily, or small and mid caps, but yeah, quality. So I really like that position. Also all world, and also the kind of small caps as well. Some of them aren't really small, like the S&P 600, but relatively compared to what their sort of larger compatriots are doing as well. So really happy with my movements and the breakdown overall. And really, to be honest, if you look at my month-for-month change, you can see that like my top four positions are all up between sort of 4 and almost 9%. So that's been pretty good. But what's been bringing that down has really been Gamma and Genius. So these are my two largest single stock positions. Gamma actually had a trading update and an AGM that was bang on line with expectations. I thought it was perfectly fine. If I'm honest, the stock's been a little bit beaten up since they acquired an acquisition in Germany or announced it. That's going through at the moment, but it will substantially expand their footprint in Germany. Germany's a really competitive market, but Gamma is fantastic and so is winning pretty much wherever it operates at the moment. A few issues remaining, I would still say, in the Netherlands. I think it's third biggest market. But overall, I'm really happy with Gamma's direction of travel. Really, the only thing I could find with the update was that their UK arm is sort of slowed down a little bit. Um, but honestly, I feel like it was a massive overreaction. Interestingly, as well, Gamma's just moved to the main index, so from AIM to the FTSE 250. And I felt like it was really the reaction of an index and the people who monitor that index not really knowing the company very well. So now it trades on a really good current P of like 13 and a sort of forward P of 11. And I think it's a great P, frankly. I would be buying more of this if I could at the moment. So yeah, so I thought the market reacted really poorly for not very good reason, but that did fall quite substantially, and more so in the middle of the month. It was down about 18% at one stage. Genius, I don't really have any update on. This has been a company that I've been happy with in terms of it meeting its guidance for the last sort of 3 years, basically, and gradually becoming profitable in my portfolio. At one stage, I was very heavily in the red of this, like minus 70%. But I bag held for good reason, I think, but it's not had a particularly good month. No obvious reason to me why. And I think, to be honest with you, it's now modestly undervalued, but it still hasn't technically become profitable. So how you want to value that is obviously up to you in terms of multiples and growth and everything else. But yeah, I still like Genius, and it's going to be a long-term hold for me, I think. So yeah, despite the fall there, I'm sort of confident in its long-term success. But that's basically been the main movers within my portfolio of what's been bringing it down. But again, most of this is modest movements compared to what we've seen before. Just a few there, sort of growing more than 5% to get it highlighted. Maybe I will just round out actually with the nuclear position there. It's a smallish position in my portfolio, but it's been really strongly performing off the back of the fact that like two of its top 10 positions have seen growth of like 400% year on year. So that's been really helping. Obviously, I regret not having a bigger position in this. I'm not really quite sure what to do with it at the moment, to be honest with you. It's a fairly unusual thematic hold that's up sort of like 35% within a couple of months. So I've got a really good buy, but now it's kind of starting to look a little bit toppy. So I might trim this and put it into copper, which is sort of flat in my portfolio at the moment. But again, I kind of don't want to just throw money into copper when my nuclear is also doing quite well. And there are a number of interesting companies, and I quite like the ETF itself. It's not just like a boring big miner uranium plays. It's got some like interesting, innovative small companies in the SMR space and a few other things like that. So I think it's a really interesting ETF that sort of has a little bit of everything, both nuclear power and uranium. And then it's also got quite a mixture as well of sort of small, medium, and large players. So yeah, that's also been doing super well, primarily fueled by those two big performers. I think in like position 3 and 7 in their portfolio, going up 400% has definitely helped. So yeah, so like I say, broadly speaking here, I'm super happy despite my single positions not having a very good month, and the ETFs above them basically still below their recent all-time highs. And again, I think there's no obvious reason for that. I know there are some doubts remaining and concerns around tariffs and all the rest of it, but for me, I look at the companies in there and they're all great companies, so I will continue to be confident until I see some kind of reason not to be. Yeah, right now, I don't see any reason not to be. So we are sticking with it and trusting the process, basically. All right, next on to portfolio graphs. I've mentioned this before, but I'll keep mentioning it. It's my most important graph, but has gradually become less important as I've been more restricted to buying funds and ETFs rather than individual shares. For anyone who's new to the channel, that's because my wife works in private equity, and so I have restricted trading. I basically can't buy single positions unless they're grandfathered in. So over time, my portfolio by extension has become less individual and more ETF. But that's the reason. But still, because I'm taking a fairly thematic approach rather than just putting it into an all world and letting it go, I still am trying to beat this because actually there is some logic there, I suppose. Like I'm having to pay higher fees. having to do a bit more research. It's a bit more complicated, and the idea is that really worth it, right? Why don't I just put it into an S&P 500 or an all world or etc. And by the way, the all world is the ACWI, which I think is a pretty good all world. It's a tough comparison, honestly. So I'm still pleased with the fact that we're beating that. But to be honest with you, I've lost a bit of ground against the S&P. So I've sort of been behind this honestly since my Russian minor position a couple of years ago got absolutely battered. But we've maintained that distance. Once or twice we threatened to catch up, once or twice threatened to fall away, and now we're back to being in the middle again between the S&P and the All World. So we are persevering, but not making a ton of progress over the last month as a result of everything we previously spoke about. Honestly, I was a bit surprised when I was doing month end. I'm a bit more disciplined now as an investor. Like I don't look at this every day, not even every week, to be honest with you. And so when I looked at this and I saw that actually I'd fallen back, I was quite surprised because I had a pretty solid month. But yeah, the S&P just sort of smashed it. I mean, I was about the same as the ACWI and outperformed the FTSE 350. So we'll see what the rest of the year holds. I actually have a sneaking feeling that the FTSE is going to outperform the S&P overall, just because of the defensive nature and like the literally defense stocks as well as sort of a lot of um, the value positions. But so far, it's that's not proven to be the case, and the S&P is still performing quite strongly, although very erratically compared to other things. However, all that said, I'm sort of again confident in the portfolio and trusting myself, and so we're remaining pretty confident. But we'll just round out the video now with the last couple of graphs. So, and yeah, as I touched on then, we remain some way off of our all-time high from a profit perspective. You can see it there in the top graph. Quite the ride over the last couple of months and still fairly substantially below our all-time high. But again, trusting the process. We've been through these kind of falls or, certainly as a percentage wise before. This one was quite sudden, but again, I'm super pleased how I responded by chucking like 52 grand in. And, at the time that was like 20% of my portfolio as well. So it's a very substantial increase very quickly into a firestorm basically in April. So I'm very confident in the long run, like picking up some shares in like Alliance, especially like picking that kind of stuff up at 330. There was a bunch of other stuff as well I picked up that was sort of like had a 20% dip. And so even though it's still below its all-time high, I'm very comfortable with the fact that I added to my positions. And averaged up as well on a lot of these positions. Like at one stage, I was up like almost 50% on an Alliance. Now I'm up only about 35%, where I've just been continually just buying in constantly. Honestly, from like 2 quid, I bought into Alliance a long time ago and have just been gradually building my stake over that time. So, but a couple of other positions very similar as well. Honestly, I was trying to think of the right word here, and I think sanguine is probably the best one. I've become quite emotionally calm. It takes quite a lot, to be honest with you, to sort of unsettle me. Just because I do feel like I've been through this before, and honestly, the Russian invasion of Ukraine and the fact that I had, 10% of my portfolio in Evraz and Polymetal at the time, has really sort of hardened me to sort of swings now and made me quite resilient. In November this year, it would have been 5 years since I've been investing, so that's a long time to be investing, and so we're just sort of getting quite used to it, really. But not that I like falls, to be honest with you, but I always try and look at the bright side of falls, and again, especially if it's a buying opportunity for me, that's quite exciting. So yeah, although I don't always enjoy, a 5 grand loss or a 10 grand win or a 10 grand loss even, especially on a single day, um, we just know it's going to happen. I'm still 20 years away from retirement. There's still a lot of time to be buying. And, like my portfolio should be, I don't know, about 8 times as large as it is now by the time we get to our retirement. So that's a lot of things to still buy and for things to happen over that time. So, yeah, I think it's just a case of trusting the process. And yeah, that's where I'm currently at mentally. Yeah, and I guess that would be how I would choose to log out here. Like, I'm quite active in Discord, in Briscoe's Discord specifically, and there was like a lot of worry in April, and I was sort of like, no, like 2/3 of the time, it's best to add money as soon as possible. You've got the money available or can make it available. You should be doing it. And like, I trusted myself. I went with my convictions. And actually, to be honest with you, it's like I used to play a lot of poker as well. I'm going to try and sort of side hustle and get back into poker. But it reminded me of something from there where like you can't be focusing on the outcome. You focus on did you make the right decision at that moment in time. And like the thing is, I think I did. And right now, I think like it's easy to have that conviction still because I'm up on those buys. But even if the market has subsequently gone down in May, June, July, etc., I'd still be in that position, because then it's like you risk becoming outcome influenced. And honestly, I don't think that's the best way you can be when you're either playing poker or investing. So yeah, so I'm really pleased with my response in April. May, I did very little, honestly, other than a modest bit of rebalancing, and I don't expect any major movements over the next couple of months. But I will look at the buys I did, especially in April, and see if I can tweak a few of those things. Maybe, like it will act as almost a swing trade. Maybe I will sort of look to rebalance my portfolio just a little bit to have, the fact is, yeah, the top four of my positions are almost 70% of my portfolio. Maybe that is slightly too heavy, but I don't have any real rules. When I first started, I tried to have a number of somewhat arbitrary rules, but I've sort of gradually let them go. So maybe 70% in four positions is absolutely fine, all right? But I kind of just going to have a little bit of a reassessment over June, see how we feel, and then we'll go from there. But so far, I'm feeling very happy despite underperforming the S&P, and enjoying, in a weird way, the kind of roller coaster at the moment that's happening. So yeah, that's how we're doing, up modestly, and continuing with our plans. So that's everything. Thank you very much for watching, everyone. I've been the Boss Hog, and good luck with your investing. Bye for now.